Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that exactly from this level, from this previous level of monthly resistance, all this move to the downside was created. And right now, we can notice how the market has broken again below the zone. So this previous level of resistance is again acting as resistance here, as this market is currently testing it. So from a monthly perspective, we have a market which is testing previous monthly resistance, again acting as resistance, and we could expect some bearish price action to be created away from this quite strong monthly resistance zone. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, if we identify this area and we put this blue box on it, we can easily see how this area is exactly the zone from which all this rejection to the downside was created. So this area here was acting as resistance. The market then broke above the zone, went for a retest of it after it was turned support, and the market respected it as support. And in fact, all this rejection to the upside was created, and now the market has broken back below the zone. So this previous support is now once again acting as resistance here, and we could expect some short-term bearish price action to be created away from this monthly and weekly resistance area. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, the situation is quite clear. We have a market which, in creating this move to the upside, has also printed this W formation. And in general, after the creation of a W, what you would expect is for the market to provide a potential rejection to the downside for the completion of the W formation at the neckline, which is the previous resistance turned support from a daily standpoint. So here on the daily time frame, what we could expect is a potential rejection to the downside for the completion of this W formation at the neckline, which is this previous resistance turned support here from a daily standpoint. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders, and we check the data precisely for the JPY, the first thing that we have to keep in mind is that with the last reports, net positions on the JPY have been massively increasing. We went, in fact, from having a negative net positioning of minus 130k net positions all the way up to having minus 55k net positions. Now, if you look closely, you can see that we actually went from having one of the lowest net positioning of the history on the JPY to now having one of the highest historical net positioning on the JPY. And we can see, in fact, how with the last two reports, we have seen first 3,500 longs added from an institutional perspective and 12,700 shorts getting closed. And with the last report, we had 5,500 longs added and 3,700 shorts getting closed. So clearly, institutions are moving back to the bullish side of the JPY, and a strengthening JPY makes USDJPY weaker. Because obviously we are looking here at USDJPY. So if the JPY gets stronger, USDJPY gets weaker. So in a situation like this, where from a pattern standpoint, on the daily time frame, we have a W formation, and the monthly and weekly timeframes have clearly shown us that at this level we do have resistance. What I could expect is to see more institutional shorting of USDJPY inside of this area, which at that point would further increase the probabilities of a potential rejection to the downside, for the market to essentially go and complete that W formation that we have just identified from a daily perspective, which has its completion zone at this level of previous daily resistance turned support. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect in a situation like this is that if the market will shift from an intraday bullish market, as we have right now, to an intraday bearish market, at that point, I would expect a potential rejection to the downside for the market to complete this W formation that it has from a daily perspective, and also reject the weekly and monthly resistance areas that we have identified at the beginning of the video. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program. And you will see me here that in this video, I break down exactly everything that you gain access to in this amazing mentorship program. And if you continue to scroll down the website, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out at least as soon as possible. The link is both in description and in my bio at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.